Hey guys, how's it going? Welcome to the video here on YouTube on the Cabroto channel, and where we just go through our price action, the charts, the what's going on, the key levels, look at the trade that we took on the live. Actually, today I'm going to look at that as well. Look at the entry, the stop, the targets that it went to, how did we actually know that it was going to go there, how we actually got in beforehand. So that's what we do here is the market starts up and opens up. Crypto actually is running 24/7, right? We do look at BTC. It's simple, it's structured. That's why we stick to it. Sometimes we look at ETH and we look at Solana, but to kind of give you an idea, in this video, I want to go over really and strengthen that the market opens up and then we get in. It's almost like a crystal ball. Everybody always like, hey, I wish I had to shake the crystal ball, right? Well, ours came on Amazon. We ordered it. They happened to come in stock, and we got one. So that might be a joke, right? Ha ha. But when we look at a trade and we see the opportunity, we see that way before it's happening. We're not actually looking at getting in, and when it sets up, we're going to do it. Let's go ahead and jump on over the charts, and I will show you exactly what I'm talking about here. So you're probably seeing this if you're watching our videos. It's the same thing all the time. We have our triggers on here. We have the gaps that we look at, and this line right here shows when the market opened. So I sit down on my computer at about 8 Central Standard Time, and the reason why I sit down on my computer at that time, because at 8 or 7:30 Central Standard Time is when the New York futures market opens up. So there's volatility that kicks in the market. That's why I'm marking these orange lines, which are 30-minute candle. So from 7:30 to 8 o'clock, that's why I don't sit down on my computer until after 8 o'clock, because this gives us time for this candle with the volatility of the energy of the futures market opening up. So that's your high and low. Very simple, right? These triggers, we used to talk about how to figure them out, but now we don't. We just use the levels on our site. It's quick and easy. You paste a button, put it into an indicator, and it puts it on the chart. Very easy. By 8 o'clock, though, there's another button. We click on the chart, and it gives us high probability, which is measuring the gaps, which the gap is the measure between the daily resistance and the daily support off of their triggers. So this orange trigger to this area we measure, or we measure this gap up here. If you watch us all the time, again, you'll see this. So if the gap is over 0.5, up to 1.5, typically, that's a high probability trade. So you can see this is the gap here that I'm looking for. High probability for this to break down. So really, the other thing to look for is just kind of a little check mark, is the 30-minute candle that was printed, is it closer to which trigger? So a lot of times if it's closer to the lower, you're going to see the breakdown. If it doesn't break down here and reverses back up, a lot of times it's just going to die the rest of the day. It's just kind of simple stuff that if you're watching and analyzing the price action here, it'll just tell you what's going on. So that's just for me to kind of lay this out. Well, all this is put on here really after this 8 o'clock candle. So on this 15-minute chart, after 7:30, we go into here's your 8 o'clock, all the way right here is this candle. So this 15-minute candle right here, 8:15. I already have all this set up. I already know what I'm going to do. There's your crystal ball that I'm talking about. I already have this trade ready to go. Am I going to get in? Well, I want to see my 15-minute candle close and commit to what I already have a high probability to. Well, I don't really need to take the tools here and put this on, because what I'm going to do is mark it on what it's already giving me. So I'm going to go ahead and put my stop in. You can see that when we put our stop on, we put it just above the 30-minute high if I'm going to take a breakout. And I'm going to run this to my target 2. This is a very high, strong target to go to. You also have your 200 coming up in here. Now you might be asking, like, well, why did you take the trade? Why are you thinking about this trade? What's the probability? Well, the gap is about 40% if you're going to look at rate it on a check mark. You also want the bias in your favor, so the wind, right, the energy where it wants to go. Right now, you're on confliction right now in BTC, so you have a micro or smaller move up right now, so that's bullish, and then you have a weekly candle in the last week or so that's been bearish, so you kind of have a confliction there. So we've already been running up, and now it would not surprise me for us to come back and test some of these key areas, and you can see it doing that right now. I wouldn't get too bearish yet, because This may be finding a bottom right here already, because that is a strong area. 70,500 is a strong line in the sand. So if you're looking at this trade, you might be like, okay, well, how did you get in? What did you do? I'm going to go ahead and get into it right now and show you. This candle right here is the 8:30 candle, which for me is 8:30 Central Standard Time. That's 9:30 Eastern Standard Time. That's when the New York Stock Exchange opens up for our market. So you're always going to see volatility in any chart when any exchange opens. So the reason why is because that's when the computers get kicked on. Computers run algorithms, and they're looking at the charts, and they do buys and sells orders. They set themselves up for the day. They have key levels that they need to interact in. And then of course, exchanges are opening up with the actual New York Stock Exchange. People are actually looking at trading. They have the ability to trade now because it's open. So you get a lot of volatility is what I'm going after. That's what lines up with all this volatility. So this candle is going to create a lot of energy. Well, I don't really want to trade that candle. So even though it came down here, I want to see the close. Now this close right here, technically you could say, well, I'm going to go ahead and enter, and I'm going to put this trade on as a limit order. So if it comes back up, I'm going to get filled. Well, here you might be like, ouch, you got filled and it ran all the way back up, came down, closed, but did it actually come and take you out? If you put your stop right here where the system said to, the high on this candle, this is why you put the trade on and you walk away. You don't sit there and stare at the charts because you'd be stressing out, right? So your high right here was 72,300 or 735. The stop was at 72,764. So you're within like a sliver. And like I said, this was put on though right at the 8 o'clock. This trade was already designed for the day. It already had set the levels that it wasn't going to come take out. So the trade kicked in right here on this candle's close. So you're looking at this candle. You go into the 5-minute because this is where you can take your entry. Because see, here's that candle. It broke down and then it back tested and filled you. Then it ran all the way up and you're watching thinking, oh, this is going to take me out. Then it just breaks down all the way down to your target, which was right here. You can see I also had it marked right here, and you might wonder why did you mark that? How did you mark that? Well, all you have to do is drag a line between the green line and the purple line, connect those two there, and then drag it down and have it touch the purple line. Whatever it goes to is where you want to put the mark. You can see I already did that. That's where I put my stop. I also, the trade, also already told me where my targets were. So you can see it was a nice quick trade. So you got in on this candle roughly right around here, which was 8:45-ish. And then it got you out on this candle, which was 10 o'clock. So an hour and 15 minutes, it would have been your trade. This trade right here was 2.18. If you enter and put your stop where everything was telling you to, you just got in. So easy math, $100, you would have made $218 on this trade. Not a bad deal. Obviously, if you're going to risk more or risk less, whatever, you can do the math. And it'll tell you really what it is. You can just times that number by 2.18 and it'll tell you about what you would have made. So quick and easy trade. You're out for the day. You can see it really grinded the rest of the day. Didn't do anything. So what is your system is what I would ask. What are you trading? Why are you trading it? What are you looking for? Are you the guy that's trying to make a decision right here? Or are you the guy that made the decision back here on what's going to happen? And what are you going to do? So I'm the guy that's back here on this candle at 8 o'clock. And by 8:15, I already know what I'm going to do. But I'm waiting for the price action to let me do it. So that's the difference. And that's why I said we have the crystal ball. Because I already would have told you at this candle right here that I'm going to enter here, put my stop here, and I'm going to put my target here. I already knew by 8:15 what we were going to do. The only way it was going to stop me from doing it is if I didn't get the actual close. So if I didn't get price action to tell me to get in, then I wouldn't have got in. So the reason why it told me to get in is because this 15-minute candle closed below the breakdown trigger. So that was my confirmation that, yes, we're going to go this way. This candle right here is what I was waiting for it to come back up. And just could have easily just traded back up right here, got back up in here a little bit and broke. But obviously it came back up and tested this upper area. But that's the thing about trading. High probability. What I just explained to you right now, we've been running about a 70% success rate in this area. So there is trades that will come back up and stop you out. And you could have easily watched it. And if it set back up, you could have got back in and kept running this down. So each your own on your own trading. This is just me showing you what we do. You can do whatever you want to do. If you want to have high probabilities, practice where success is. And I'll say that this is where success is. There's a lot of other people that have success as well. You can watch them and learn and make your own system based on multi-systems. There's nothing wrong with any of that. The biggest thing is consistency and money management and sticking to something that might take a loss twice. Like say if I'm running 70%, there's a 30% time out of 10 trades, 3 of them are going to take a loss. Well, if I'm trading $100, I just lost $300 on that, right? But so FYI on how you want to trade. But all right, guys, I will leave you at that. Hopefully this was informative and exciting, that if you're struggling in trading and don't really know when to enter, where to put your stop, where to put the target, when to get in, why to get in, that's it. Like I just showed it to you in this video. So like and subscribe, put comments in the comment section. Love to hear from you. We are happy, having a good time trading. It's always fun when you can see accounts growing and demo accounts growing and testing happening. That is what we're doing here at Carbrota. We are changing things and trying to help out the local basic trader that's just trying to do it out of his house and trying to learn and develop himself. So that's what we're here for, to help you in that area as much as we can. One thing we'll never do is actually trade for you. So that's why you never see us post an actual trade, because that's not what we are. We're not a red light, green light strategy. We are giving you high probability trades that you decide, with levels that you decide what you want to do, and take action on them. So and help you learn and develop yourself as a trader. So all right, guys, I'll see you in another video. See you later.